Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Friday, June 11th, 2010. It's 11:30 a.m. Eastern Daylight Time in the U.S. It's 4:30 p.m. in London, 10:30 a.m. in Mexico City. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. We'll go right to the news. Well, the lead news on the insurance front is coming from London, from Brit Insurance. Brit has confirmed what we reported yesterday as breaking news from the Insurance Insider, that they did receive what they're calling an unsolicited indicative proposal from a private equity group. Brit said that it had reviewed the proposal and concluded that it undervalued the company by a significant amount. The Financial Times this morning reported that the U.S. buyout group Apollo had in fact been the group that approached Brit with a bid of about £10 a share. Brit closed last night at £7.29, giving it a market value of about $841 million US. So the Apollo bid was about a 40% premium. Apollo is headed by Leon Black, and also includes Sanjay Patel and Gernot Lohr. They held a face-to-face meeting supposedly last week with Brit chairman John Barton. Brit's being advised by Merrill Lynch and also by a boutique advisory firm called Westhill. This morning in London, Brit saw its shares soar 20% all the way up to £8.80 as investors reacted to the bid. Then, later in the morning, Brit came out with a statement indicating that they hold the door open to a higher bid from Apollo Global Management. So we'll see what happens there, but apparently Brit is for sale. It'd be very interesting. Well, earlier in the week it was Munich Re revising its Chilean loss claims. Today Swiss Re came in. They've increased their estimated loss as a result of the February Chilean quake. Swiss Re said that it now expects claims net of reinsurance to be about $630 million US. This is up from their earlier estimate of $500 million. Swiss Re said that the new estimate reflected, quote, more specific information from clients on actual damage to individual properties and business. In the U.S., there's some negative economic news. Retail sales plunged in May by the largest amount in 8 months. Consumers are apparently saving money rather than spending it. The big drop raises new worries about the durability of the economic recovery. The Commerce Department said that spending fell 1.2% last month. Consumer spending accounts for 70% of total American economic activity. However, the University of Michigan Consumer Sentiment report indicated that consumer confidence is actually up. These competing reports help mitigate the stock damage. The Dow Jones is only down about 42 points right now. This is after a very positive day yesterday. Here's an interesting story, a little head-scratching maybe, people getting into the act. John Napier is the chairman of Royal Sun Alliance. He has written an open letter to, of all people, President Obama. He's warning him that the president's attitude is coming across abroad as, quote, somewhat prejudicial and personal, and that there is a sense here, presumably England, that these attacks are being made because British Petroleum is British. Mr. Napier appeared last night on Sky News, and he said, I've just put on record my concerns about the tone that's developed, particularly about the personalization of issues, which is alien to us and our culture. In his letter, he said that, quote, the immediate issues are very challenging, but are best solved working together in a more statesmanlike way. Mr. Obama obviously had heard of this letter. I don't think he had any comment. One group of people who did have a comment were Mr. Napier's employers, Royal Sun Alliance. They very quickly this morning issued a press release indicating that Mr. Napier was talking in a personal capacity and was not speaking on behalf of Royal Sun Alliance. Well, speaking of British Petroleum, the news just keeps getting worse. New figures for the spill rates at the blown-out well indicate that the actual spill, the amount of oil that actually came out, and to some extent is still coming out, may be twice as much than what was previously thought. This could mean that anywhere from 42 million gallons to 100 million gallons of oil have already been spilled into the Gulf of Mexico. For the third time, the U.S. government has had to increase its estimate of how much oil is gushing. All the new spill estimates are worse than earlier ones. They're far more costly for BP, which, as we noted yesterday, has seen its stock sink dramatically since April 20th. The spill, according to the government now, was flowing at a daily rate that might have been as high as 2.1 million gallons a day. That's twice the highest number that the federal government had been saying. Also, next week, President Obama has summoned Tony Hayward, CEO of British Petroleum, to the White House for a meeting on June 16th. If I'm not mistaken, that's also the day that Mr. Hayward's going to be appearing in front of Congress. Some news from Trieste, Italy, as we reported 2 weeks ago, and now confirmed, Generali may consider buying some of AIG's Asian assets if AIG decides to break up its operations in that area. Its CEO, Generali's CEO, Giovanni Perissinotto, said this morning. He said, "We could have a look at those assets. We have to wait and see what will happen to AIG's Asian unit, AIA, because if it's going to be listed on the stock market, we're going to rule that out. That would have a negative impact on Generali's balance sheet." Last year, Generali started to look at possible ways to further expand its presence in Asia. Since 2007, the company has been selectively expanding its operations in Central and Eastern Europe, as well as India and China. The AIA acquisition or joint venture would be a big feather in their cap. We'll now go to a word from our sponsors and come back with the rest of the news. That's our little soccer commercial. I don't know if the World Cup soccer commercial done with an American slant, obviously. Well, back in April, the United States Treasury Secretary Timothy Geithner held up a required every 6-month semi-annual report to Congress as to